Welcome to the Trent Klarenbach Podcast, brought to you by the Klarenbach Grain Report and Klarenbach Special Crops Report. Today we have David Nobbs of Harvest Grain for our second series on special crops. You might remember back in August and September of 2025, we did a series of 3 videos discussing lentils, canary seed, and peas. And this is a follow-up to that series. And we are in April 2026 today. David, welcome to the show.
Thanks, Trent. Glad to be here.
Yeah, it's always a good time. So Dave's going to talk about what he sees in the special crops market, and basically I'll let Dave lead the way.
Okay. Thanks, Trent. I farm as well, and trying to make decisions, and I have a meeting with my spreadsheet tonight to make some final decisions. But it's tough. It's, last fall we were looking at still quite elevated prices compared to where we are today. And, we've seen production climb to the highest level on just about every crop that we've seen. So we've got significant carryouts, and it's harder to pick a winner this year, right? Then we've got fertilizer, we've got the Iranian war, diesel prices, although I calculated my increase in diesel costs at about $4 an acre between the old price and today's price. So it's kind of almost irrelevant, but fertilizer is relevant. And, the Iranian war hurt lentil prices in some sense because we ship quite a bit of product in there into Dubai, and I'll get into that a bit, and that effect. But also ocean transportation costs are going to impact every crop, especially containerized crops, as well as rail freights, and so the whole system's getting kind of hammered from the top down. There is some bright spots, though, I think. Let's see if I can pick them. For my own operation, but our farm will still have 50% pulse, 50% cereal, and that's what we've been that way for a decade. So I will jump between one pulse and another pulse, but at the same time, there's only so much you can shift. I don't grow canola. I think the canola rally has been great, and if you sell it, right?
You sell it.
Yeah, and I've seen this so many times where these markets kind of break down right after seeding. And, if you're going to grow canola, you got to sell it. If you're, especially if you're putting in expensive urea, you've got to make the sales. And if you're not willing to make the sales, then I see it as a big gamble because, it appears that this conflict could come to an end. Now it's only been 1 day since this truce has been announced or ceasefire has been announced, but we could slide back to $12 or $13 very quickly on canola, and maybe you'll have comments about that from your analysis. But I'll maybe start with lentils. In the fall, I was really dialed into production numbers. Acreage versus Stat Canada, production numbers, and all of those things have been kind of proven out as the year goes on. SAS crop insurance, yield results, Stat Canada increased production per acre, therefore total production. So right now I'm just kind of fast forwarding to today's numbers. And the bottom line is they're big, right? The production was big, and hence a 20-cent Eston or an 18-cent number 2 Eston or a 17-cent number 2 Eston, I guess we're at. 25, 26-cent Laird has actually held up not bad. And Reds have actually rallied since harvest. So I'll get into all those independently. We grew about 3.3 million metric tons of production of all lentils. And we carried in about 600,000 tons, primarily red lentils that were carried in last year. So we've got 4 million roughly total total production, 4 million metric tons. From August to the end of February, we shipped 1.37 million metric tons. Projections are that we will ship a total of, I just forget that number. We will ship 2.2 million metric tons with seed use out of that crop. So we're going to carry about 1.7 million metric tons into the next crop year. Right. And as we carried in 600 last year, we're carrying in 1.7 next year. This is totally 04, 05-ish, right? Where these volumes just kept building even though acres got cut in subsequent years. Our total supply continued to increase. So about, of that 4 million metric tons, about 2.5 million is reds, and about 1.5 million is greens. Small green, large green, a little bit of French green, and a tiny amount of rich leaf production. So these are big numbers. These are bigger numbers than we've seen in a couple of decades. And it's going to continue to have a hangover effect on our new crop pricing. The positive is a Laird lentil. We've still held to 25 and as high as 28 cents this winter. I mean, that is amazing, actually. In 2019, we got down to 19-20 cents on large green lentils, and this year it's held up fairly well. Although I wouldn't want to be the guy unloading green lentils in July. I think you'll see some real breakdown July, August. If we have another reasonable crop coming, you'll see people try and empty those bins, and that's the worst time to sell green lentils is in July. Estons, sorry, let me back up a little bit. So our third largest market for lentils, first largest is India. In those 7 months took 400,000 tons. Turkey took 290. This is mainly red lentils. And India will continue to buy reds, but will they buy another 400,000 or 500,000 tons from Canada? That's quite possible. Turkey harvests its next lentil crop in June, so they're probably on the downward spiral as far as buying product. And so we have 2.5 million metric tons. We've accounted for 800,000 tons. Now there's maybe another 100,000 tons went to Pakistan, and then you've got Dubai, and Dubai is actually number 3 for demand in the world. Okay. About 14% of our demand. Historically, that was all large greens, would go into Dubai for furtherance to Iran, in a sense circumventing sanctions. And that's, through a lot of my career, that was the movement. Now, Russia's ate our lunch a little bit in Dubai, but the other thing that happened was there was a number of splitters in India and surrounding companies have set up operations in the free zone in Dubai. Okay. So they're now splitting there, receiving the product in Dubai to split for India or split for the Middle East, and some consumption in Dubai, but it's mainly for export. And so a month ago, or 40 days ago, I think, 40 days. Already 40 days for a 3-day war. It's taken a while. But that has halted all shipments into Dubai. So anything en route, the ocean liners just dumped anywhere, right? Any port they were near, they took it there, said, good luck, here's your bill, and then you have to re-export it for a similar ocean freight rate to a different destination. So we've seen this stuff both en route to Vancouver and stuffed in containers or on the water has got displaced and has had to move into different markets. So that's been bearish on large green lentils. It's really hurt our ability to ship anything, and now we're waiting to see what happens now. Again, we'll and Dubai could stockpile now, right? Because of this conflict, they may carry more inventories. And there's a number of countries may do that, provide some kind of buffer stock instead of just in time type of shipping. So it could have some positive demand effects eventually, but right now it's put a bit of a slump in the large green market.
Is there, what are the restrictions on Dubai being a destination? Is there trouble getting the transportation in there?
Oh, yeah,
They're
ocean
rerouting,
liner.
obviously.
Ocean liners will not go there.
Is there a rail freight or something to offset that a little bit, or is it just not a large enough volume?
I don't really know, but no, I don't think there's any easy way to transport into Dubai.
Okay.
Now, this trade relationship with Iran is obviously in jeopardy too, right?
Right.
You know, I mean, I've seen the boats that come from Iran with 1,000-liter totes of oil come into Dubai, drop off the oil, green lentils go into the boat, Panasonic TVs, cell phones, whatever, and then these little boats go back to Iran, and we all now know about the Strait of Hormuz, you know, because we've seen the map, you know, 3 times a day, and you know, so it's very obvious, it's very close, and that was a trade partner, but Iran has bombed Dubai too.
So I understand Russia, maybe China, probably both, are still getting supplies into Iran through another alternative method.
Yeah.
The alternative road, I guess.
Yeah. Yeah,
Is that
from
a
the
possibility for
east.
some of these lentils too, some of these food products? Or?
Eventually there'll be something open up, or somebody will find some way. I mean, there's truck routes, product move long distances by truck, and very expensive.
Yeah.
Makes our truck freight rates look tiny.
Okay.
You know, someone was talking about a 1,200 kilometer move, but I can't remember the cost by road, but it's not, they're simply not set up yet for this. So, and you know, people will arbitrage these new realities, and stuff will flow, but in the short term, it's impacting our number 3 lentil buyer for Canada, right? So, you know, I continue to find the whole situation shocking. You know, nobody can really argue that Iran is any better off now either, you know, and which you would hope would be part of the reason that the U.S. went in. But that's for much higher pay grade than I got, so I know nothing. You know, positives in the green lentil market, large green lentil market, though, but Colombia took 40,000 tons in the first 7 months, so they're kind of normal procurement. One of the, not so much for a green lentil, but a small green lentil, we've had good shipments into Europe, into Morocco. Morocco's actually double a year to date, and that's in Eston. A lot of the European demand, I think, is about 80,000 tons in the first 7 months. A lot of that's Eston, so lion's share of that's in Eston. So we've had good movement there. Peru is normal. They take about half Estons, half Lairds. They've taken, I think, 20,000 tons into Peru, 84 to Europe, and 18,000 to Mexico. So we've had a good run on Estons, and you know, but as Northern Hemisphere, so Europe, Canada, Morocco, as we move to our summer, we consume less lentils in these countries, right? So because we're moving out of our winter, we're moving into our spring, so there's less lentil consumption in the summer. So that's the big negative for an Eston. And I always say, you know, move your Estons by Christmas, because the latter half of the marketing year is never kind to an Eston grower.
Okay.
Large green growers, it's a year-round event. There's been some large greens have gone into India this year, but it's been limited due to the price of pigeon peas. But, you know, I won't say there isn't some going in there, and they could long-term, you know, increase demand. And that's, you know, why on my farm I'm shifting generally to a large green lentil. Is because I think there's more upside on it. And I think with the Reds at 2.5 million metric tons of supply in Canada and 2 million in Australia, we need more than what India can take. And I really truly believe that the red lentil market is a bit of a head fake. You know, I just don't think there's a sustainable rally available in that market. Whereas if you had some quality issues in the green lentil market, you could see that thing flame up.
Okay.
So that's why I'm shifting shifting my acreage.
Go back to Morocco. They're doubling their imports this past year.
Yeah, so they take, I think, 80 to 60 to 80,000 tons. But they're very price conscious. And I started to say this in general about green lentils. We haven't seen people really stockpiling. Okay. Canary Seed, we haven't seen it. And, I've been asking those questions like, as a buyer in the destination, when we were at 40 cents a year ago doing new crop contracts, maybe even so Christmas 2024, buyers couldn't buy enough.
Right.
They were just lined up and
Yeah.
we're doing contracts left and right. And at half that price to the grower, now they're not buying anything. They're scared it's going to go lower.
Yeah.
Right. And so I think these are the bottoms, and I think anybody hoping for a lower value is wrong. And there's a bit of an issue though on new crop contracting, which is a bearish item for the lentil market in Canada, in that we aren't doing any new crop. We're doing none, right? Last year we were doing tons, we had big positions, and this year we're not doing any of that. So our marketing isn't probably going to start till the summer,
Okay.
and that's a negative.
So producers aren't rushing out to price new crop yet.
No, because they're looking at it as if they're pricing the bottom of the market.
Yeah.
Right. And so, I understand that. But it all depends on, how big is this crop? So I didn't get much into Statistics Canada numbers. I think they said a 5% drop in lentil acres, and Canary, I think they said a 12% drop and a 5% on peas. And I can't argue with that, but those numbers are from December. They take those surveys December, January, and I don't buy into those numbers that much.
That's for new crop.
Yeah.
But with fertilizer, the way it's gone.
Yeah, so fertilizer's gone up, which could move some acres to pulses, but canola's gone up, could move some acres away from pulses. I don't think we're going to see a drastic shift either way. And the other thing I find in times like this, that people kind of tend to stick to their knitting a little bit when you're not real sure what to do.
Yeah.
Right. So, what's urea? $1,300 a ton. It's significant. 1,200, 1,300. I guess I don't know exactly, but
Yeah.
it affects your decisions if you want to change at the last minute. I talked a bit about the red lentil market. Dubai, of course, is out. That's a negative. India, their production, their quality was off. They will buy quite a few reds. I'm just thinking the total reds available, though, is going to mitigate any expansion in price. And you could see it even come down a couple cents prior to harvest, I think, very easily.
From around that, what's the reds at right now?
25, 26 today, and I think it would be unreasonable. I think you'd see a 22 cent price in the fall.
Yeah.
So, that's another one. If you can find the contracts, and they're at 25, I think that's a sellable number. 22 cents, I probably wouldn't do anything.
Yeah.
So that's kind of large greens. In a nutshell, it feels like I'm now starting to get bullish, and everybody else isn't done being bearish, right?
Yeah.
I'm starting to shift, and something like Canary Seed. Literally, I was bearish for 5 years. Right. And if you look at the chart, it's done nothing but go down. And now I'm starting to take the idea that maybe we can pop up a bit now. So I'll jump over to that. And then at the end of all this, I'd like to get some of your understanding of these three crops.
Okay.
What your analysis is showing. So Canary Seed, real easy. We shipped 74,000 tons in the first 7 months of the crop year. We're on track to ship 130,000 tons this crop year, exactly like we did last year. The problem is we have over 300,000 tons available. And it, my math says that's higher. Let's just use the stat number though. So they're saying 320,000 tons available. So I'll double check. Yeah, 320 with 80 carry-in. And definitely acres are coming down 12% from 320,000 last year that they stated. Gives us 290,000 acres. I think the acreage was actually 380,000 acres, and we could be down 30%. I think their 290 is probably about right. I think there's a bigger drop because they didn't capture the acreage to begin with. Mexico by far the front runner of demand with about 30,000 tons out of that 74. So it really shows who wears the pants in this market, and it's Mexico. Oh, yeah. And the rest of the world has taken very similar levels as the year before. Kind of nothing to see here. And the exact acreage or production for this upcoming season, while I'll get frothy about it in July, and that's all I want to talk about, today it's all kind of irrelevant noise. Yeah, right? Okay. Does it really matter? Is the crop 1,200 pounds or 1,400 pounds or even 1,100 pounds or 900? It's kind of almost irrelevant. But I do continue to believe that the 20-cent kind of delivered value is close to the bottom of the Canary Seed market. In previous lows, early in my career, we got down to 8 cents and 12 cents. And somebody said that inflation from 12 cents in 2004 to today equals 20 cents. Wow. And I'm not, I was an agronomy major, not an ag major. So I don't know if I can do the math. But
everybody wants to attach inflation values to commodities and stuff, and I don't know.
It's kind of irrelevant, but it does feel like this is kind of the bottom. In the winter, we went to 18 cents for 3 weeks, bought no product. We went back to 20 cents and we started buying again, right? And a lot of people are booked solid, or getting booked out on Canary Seed demand. And if we're going to see a drop on the Canary Seed price, we're going to see a push in the summer, the clean out the bins phase. Oh, yeah. That would not be the time you want to sell. We've historically seen rallies in the spring through seeding on Canary Seed the last few years. I don't think we'll see anything this year. Yeah. Because people don't need to buy anything to process during seeding, right? Because everybody's generally got pretty big commitments and volumes to come into the class. So that's my take on Canary Seed. My acres on my farm are actually going up, weirdly enough. But when I look at it between it and Durum, there's not much difference in the two crops. And for gross per acre.
Yeah. Oh yeah, really?
I don't see it as much different. There was an article in the Western Producer on Durum, which added to my negativity about Morocco having a decent crop. And, right. One of the first things I ever learned about grain marketing was, we can kind of see what our buyers may buy in North Africa because their conditions are known before our seeding, or generally, right? And so, but I haven't really noticed that in the market until, last week when I read that article. So I was already kind of bearish producing more Durum. For me personally, it's harder to market because of the grade and quality risk, whereas Canary Seed doesn't have that. So I may shift my acres, not because I think market's going up. I don't think that at all. I think our carryout is way too big. We've got at least 1 year's supply. We're going to carry into the next crop year, and it could be more than 1 year's supply. So we are in this phase where we need, I said we needed a war. A lot of people were thinking, okay, this Iranian war is going to impact pricing for grain, right? But really all it's done is increased our cost, right? Right. Cost for shipping or blocked, some of our lentil markets. There's nothing positive about this. It's not like Ukraine where they were a producer and an exporter, and that lifted all the boats. And we don't have that in this situation. In fact, we have the opposite.
You might see it in the canola because of the close
Tied to oil.
correlation to oil.
Yeah,
Right?
yeah, exactly. That's 100%. 100% correct. But I think we were poised to increase our canola acreage anyway, prior to the war, and I don't know how much it's going to influence it. And we're down 15, $20 in the last day.
Yeah, it took quite a hit today. Yeah.
Yeah. And yesterday's.
Yeah. I just 704. I think I closed that today or something. So, yeah.
And what did it peak at? 735.
Was nearby futures was 758 peak.
What was it?
Yeah, so that's $50.
Yeah, that's quite.
Didn't stay there very long, but it was there. So.
Yeah. Yeah, the old shoot the ducks when they fly by thing, right? But you just don't know if it's the bigger duck that's you're shooting or a smaller duck.
Yeah, you don't know if another flock's coming over the hill. Do you?
So that's kind of Canary Seed in a nutshell. I mean, there's just not a lot to say, and it's just going to take time on all of these crops. But Durum, we have half a year's supply of carryout out of Canada. I mean, that's going to continue to weigh on the market, unless you have a fusarium scare in the southeast or anywhere, I guess that could pop up, but probably more likely in the southeast. But even a shorter crop due to dryness doesn't really impact these crops the way it did the last couple of years, right? There just isn't a lot of risk left. So
Interesting.
So that's Canary Seed. On to peas, which I'm probably the least knowledgeable about of the three, but I can pick out the problems. China has taken 111,000 tons in the first 7 months. So that's the elephant in the room. Total shipments is 1.3 million metric ton. Normally, that's for the 7 months ending February. Normally, you would do that September, October, November. And we have a solid 4 million ton production plus carry-in of about 500,000 tons. So we're going to carry out 1.6 million tons, which is a 58% stocks to use. So Canary Seed is 100% stocks to use. You don't have to do the math. We've got enough. I think Eston Lentils are about 100% stocks to use. Okay. The number twos and number ones, buyers may or may not take them in the new year. So there might be some demand for a new number one small green, which could offer a premium, or a new number two. And Lairds I see as more of a 50% stocks to use, and Reds have to be up there 100% stocks to use as well.
What do we need for a bullish market
In
any of those crops?
Well, we need, I said it last fall, a war, but apparently we need the right war.
But what about stock to use ratio?
Stocks to use is just price is all that's gonna fix this.
But ultimately, what did I see? 20%, 10. Like what do you
normally see?
Yeah, what do you normally see?
Well, it's been all over the map, and we've had these hot lentil markets that have been 10% stocks to use, or 5 or 7, or where we're using every pound. 2024 last summer, we were virtually out of green lentils, right? We had almost 0% stocks to use at the end of the last crop year. And now we've gone to, I'm not sure if I noted the stocks to use on Laird's, 78% stocks to use overall on the on the lentil market. We have about 78% of our needs for next year. So
yeah, that's quite a change for 5%.
It's huge, right? So, markets don't care about new crop reds versus old crop, but they do a little bit in some of these, real sensitive demand containerized shipments of Lairds and Estons. So we could see some interest in getting a fresh new crop price. And I say this to buyers all the time, like a 2026 number 2 Laird might be lower quality than a 2025. You still want the 26? Well, yeah, it's fresher.
Oh, yeah.
I don't know if it's really fresher, but we see this on canary contracts too. They say, oh, I want only 26 production. You say, yeah, okay. But you don't even know what's coming into the plant. It could be 3 years old. It could be 2 years old. It could be, harvested that day, and you can't tell the difference.
Yeah, I wonder how you would tell. I guess they just want.
It's perception.
Yeah, perception.
I mean, and it's companies that are used to buying a number of different food products, right? So they may not just be lentil importers. They could be fruit importer and lentils, or they could have spices and different things where shelf life matters, right? Or rancidity matters. So they carry that into these other crops. Quickly on to peas, or as I said, we shipped 1.3 million metric tons. We've got 4 million to ship. Just want to double check that 4 million is the right number. 4.5 million tons of peas. We've shipped 1.3. So we will have a very significant carryout this year. And that's because China wasn't taking product for, September, October, November, December, January, February. And only in March did they really start to agree. They had to wait for that tariff notice from the government. And this has caught us on maple peas. It just took forever for them to believe their own government was removing the tariffs. So we had to sit on our hands and wait for the buyers to get that recommendation, or not recommendation, but that law published that they won't be charged for 1 year. But what happens at the end of 26, December 31st? We've got another one coming, right? So there is risk still. So you won't see, I'm going to guess you're not going to see huge positions for fall shipping, but there will be business. So it's got to ride by December 31st. So we have September, October to ship, maybe a little bit early November, and then people will see too much risk.
Well, relations between China and Canada seem to be improving.
Yeah, I don't have any reason to say this tariff's going to be slapped back on. But I guess we'll see. I mean, the China-Iran relationship, probably helps Canada.
Yeah.
Probably doesn't hurt Canada, probably helps Canada. So green peas have been a brighter spot. I mean, yellow peas were at $7 or $8 here this winter. And I just don't see that number is going to move much because of the lack of Chinese shipments for this first 7 months of the crop year. And so it's going to be very difficult to see the yellow pea market rally. The green pea market, we've never got under $10 for a 3% bleach, max 3 bleach. And I think that that market's probably going to stay fairly firm. But I do think there's some acreage shift again into green peas this year. That's the one kind of bright spot in the pea market. So yeah, that's kind of peas. So do you want to kind of do an overview of those 3 crops?
Yeah, I can do a quick one here. I'll start with, sorry.
Yeah, I guess maybe Eston's large green reds.
Yeah, we can do that.
Because you got it broke out by type, right?
Yeah, I gotta figure out. I got this thing popped up in my window here. Let's do total. Okay. Yeah, what do you want me to start with?
Whatever you got in front of you.
Okay, I got Canary Seed here.
Okay,
So,
sure.
and I won't be showing this, but well, maybe I will. We'll see what happens. But yeah, so Canary is interesting to me because we're starting to find that support. What do you say the price is? Your price is now?
20 delivered.
20 delivered, yeah. So my index price is a bit below that right now, but it's starting to consolidate. It's been really, my index price has really done nothing since November. Right. And we're starting to see some signs that we can see a rally in Canary Seeds. So will it be a short-term rally, right? Or will it be a long-term? Is there anyone's guess? But I'm seeing signs that we could see a rally in the price. This level doesn't hold, though. It gets really nasty for me. But as long as it's stable on that 18 cents, I think we're looking good. And 20 cents is the key number, as you mentioned earlier.
Yeah, I mean, it just seems like growers will not support a price that's lower than 20.
Yeah.
Right, so.
Yeah, until they have to, right? But it's interesting on the chart, this has been this level, this 18 to 20 cent level has been pretty key in the past, and well, ever since probably 2014, it's been really acting as support, right? Which is interesting. But it's a round number, 20 cents, right? We can look at large greens right now. I'm still not seeing any. Let's look at the shorter time frame on this chart. I'm not really seeing early signs of maybe a rally, but it's still bearish territory for me. I'm not seeing much on that side. What do you have for your price on your price today?
Today we have no bid, and
bid.
we went there due to the Dubai issues.
Yeah.
And it slowed our shipments down, or stopped our shipments, and so I didn't want to add any more risk. So I went to no bid, not because there isn't some demand in the market, but just to protect, because there was several weeks where there was just no interest, period.
Yeah.
Right, and I think that we're getting out of that.
Yeah, it's not in bullish territory on the short term for me, or the long term for that matter. So until that, I need confirmation. So really I need to get about that 25, 26 cents.
Right.
Is what I need to start feeling good about the short term. Small greens, yeah, same thing. I'm starting to see some strengthening in the relative strength of it, but at the same time, it's seeing some consolidation. Really, the prices, my index is back where it was back in September, so it hasn't really gone lower since the entire crop year, according to my index. And
we bought some to Eston number 2 or small grain number 2 at 17 delivered in the last couple of days.
Okay.
And I think that's the problem in the Eston market, is finding demand for that lower quality stuff, or the higher quality. And that's the key. There is a marketing window here for the next 6 weeks due to seeding, where I think people will not push grain into the market. And this is the opportunistic time to sell grain. But if you get past that window, the crop looks okay, you get into June, July, and we've got enough moisture, and then that stuff starts hitting the market, we could see a 15-cent Eston number 2 very quick.
Yeah, which is interesting because of this, I have that 16-cent level as a possible price target. So,
yeah, and I can't say that won't happen because the oversupply situation is so big.
Yeah, I've seen the early, I don't even know if it's signs, maybe glimmers of hope of a rally, but I haven't got confirmation of rally in the short term yet.
Right.
Which means we have longer term trend is still lower. And I mean, we're testing those lows that I have back in September. So actually that's the weekly closing. Yeah, that'd be the lows. So it's not bullish by any means in my analysis. Reds, Reds. Reds are, I don't know. I think Reds has an opportunity to rally up higher, but I really needed to get above 24 cents before I could start becoming bullish again. I was bullish here a few months ago, and then we saw the rally, but my charts had a pullback on that price. And
Right.
What are you seeing for price out there? Just to remind me on that.
I thought there was as high as 26 delivered,
Yeah,
but
could be.
we haven't been active in the red lentil market. Like, there's just been no margin in it, and we got too many irons in the fire already, so we've been, just haven't been active.
Yeah. Well, if my index, first, that'd be 26 would be a high, and my index encompasses a range of prices. So I think it's great for determining the trend. And
Yeah, and I what caused this was a shift in the Australian dollar vis-a-vis the USD, right? Okay. And so they had to lift their offer prices because their dollar strengthened.
Strengthened, yeah.
So they had to increase their asking price, their SIF price in USD, and that spilled into the Canadian market.
Okay.
But, I think it's also kind of laughable considering how much stocks are available. And I think it'd be very difficult, which is kind of what you're seeing, very difficult to see a sustained rally in the red metal market.
Yeah, like I'm not as bullish as I was. And, as a trend follower, you're looking at moving averages to help decide where the trend is and the price relative to those moving averages. And it's, I'm not getting clear signals on that market right now for the short term. Longer term is still down, so I have to assume that. We can look at yellow peas next. Yeah, yellow peas, it's in bullish territory for me. I think there's still some more room to go, yeah. I'm not seeing a trend change on the short term yet, so.
And that's a market, of all the markets, that is the market where you could see a seeding rally. And you might be seeing that just because, if a line company gets a 50,000 ton vessel order, 100,000 tons, and they go out to buy that during seeding, that could rally the market. You don't have that influence in a green lentil or a large green or a canary seed. It doesn't affect it.
Yeah. My recent analysis, I suggested maybe another 20 cent rally.
Okay.
20 cents a bushel rally in the price potential. But we'll see if that happens. Green peas. This is what I got for green peas, and I'm starting to lose faith in green peas now. So I'm starting to think maybe we can see. And they're in bearish territory again for me.
So green peas definitely affected by the Chinese tariffs. We ship a lot of green peas to China. We ship millions of tons of yellows a year, but there's a significant chunk goes to China on green peas, and that's impacted that market.
Look at how that Fibonacci level's lined up with.
Right.
Like that's where you expect buyers to step in right here. Act as a support level. Anyways, that's for the Klarenbach special crops report readers to see that chart. But it's fantastic in my opinion. So.
Yeah. And what's this number?
Well, I'll just take this as the bottom of the chart. So that's it breaks below here. Then we start talking, $6, $6.20. So that was just a break in the pound on the charts.
We're looking for specific varieties for splitting into Zealandia at $10 on new crop. And I think that's not a bad starting point with an $7-8 green pea, yellow pea. I guess we'll see. We haven't offered it yet broadly, but that's kind of how we're seeing the green pea market in the future. We'll see.
Yeah, there's signs that these market, like you say, you suggested earlier that we could be near the bottom of these markets. And the chart suggests that could be in some of these markets for sure. It looks like there's a short-term rally happening, or it's happened already. A few of those charts that I looked at, we're not quite out of the woods yet, but
Right.
there's some hope there.
Yeah. It'll be interesting this summer, start driving around again and start the whole cycle over. Man, the time flies, eh?
Yeah, it seemed like it was only a few months ago. Did those videos and you talked about your process for acreage counting and
That's coming up again, but I kind of try and turn myself off a little bit. I mean, I have a general understanding of what growers are likely going to do, but I don't really kind of fine tooth comb it until the summer.
Do you think in your experience, and I don't know the answer, I'm asking for myself as much as anyone, is there much fluctuation in seeding intentions? Are farmers do you see much volatility in the production numbers?
I mean,
we
put down Avadex last fall, we put down fertilizer, we put down Bonanza for pulses. I mean, every time you make those decisions or you order fertilizer or you bring fertilizer in, you continue to lock that acreage in.
Yeah.
I know there's a lot of farmers just grow the exact same. They don't consider changing. I have a tendency to try and micromanage this, right? You know, and especially this year, you know, I'll probably finalize my seeding plans tonight.
Yeah.
But, you know, switching within classes of crops or, you know, types of crops. But if you put down authority last fall, don't put lentils on it because it'll kill every one of them, right? So there's certain things you can't do, you can't change. You know, is there more canola going in? Yeah, 100%. There's more canola going in. But I think there was a lot of canola going in anyway, right? So, you know, and I've heard people say, I should plant the farm corner to corner. And, you know, I've done that. I did that with red lentils in 2016 and had 28 inches of rain, right? So, seeded the entire farm, right, that year.
It worked out?
Yeah, it worked out great. Yeah. But, you know, kind of a cowboy method of, of farm management. But, you know, I like to take the most current information to make my final decisions. And the last couple of years, I haven't had to. I haven't had to even think, right? You pull the stuff out of a hat and it, you know, you did well. If you sold it, right? But, you know, this year it's a different story and buyers should be buying it. They should be stockpiling this summer. And, you know, but they won't. Like because their perception is they just got hammered by this drop. They bought a year ago aggressively, got hammered by this. So they're thinking about that, right? You know, just like somebody that sells green lentils at 40 cents for new crop and it goes to 45, even 55 because the crop is shorter. You know, then the next year they don't want to do anything, right? There's always one side of this thing sees it as a deal, and not always do both sides, right? Even 45-cent Estons, I mean, you know, you just can't. That's an incredible price when you're sitting at 20 cents, right? Yeah. So there's you know, and my marketing on my farm specifically has been very, very good the last couple of years. And this year is, you know, I might be the dumbest in the room by the end of it, right?
Well, the thing about the markets, anytime you start writing your own headlines, you seem to get hit with a dose of humility and reality.
Yeah. Humble you fast.
Yeah. No, it's, why do we pick on cowboys so much? A few people might not like that.
They're the ones that are laughing right now.
Oh yeah, they're the ones that are laughing, right? Anything else that I could talk about?
No, I think that's kind of it. You know, wish everybody a great seeding season, and we'll talk again in the summer, and we'll know a lot more.
Yeah, absolutely. Yeah, it's always no more tomorrow than we did today, right? Well, thanks. This is David Nobbs of Harvest Grain here in Saskatoon, and
thanks, Trent.
This has been a great informative discussion. Thanks for coming along.